Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. So happy that you joined me today. We got a big list of stocks to consider buying today. Yesterday, we kind of dialed back the stock picking simply because of the big sell-off from the Fed minutes. I thought that we would let the market settle in a little bit. We were looking for what we called a dead cat bounce yesterday. So far, we're actually getting it. It wasn't a screaming move to the upside, but stocks did recover. We're actually rallying a little bit again this morning. A bunch of stocks to talk about today. We're actually going to obviously dive into GameStop. We're also going to talk about a couple of other stocks that might be bottoming out that we're going to look at today. And we got a big list from our swing trade newsletter that I want to point out to you today as well. So stick around. We got a bunch of stuff to talk about and something that's going to be kind of fun today. We're actually going to be raffling off a hat. So you can see the new swing stock trend pro hats. And we have a new software that's kind of cool because it runs the giveaway. So stick around. Within 5 to 7 minutes, we're going to be giving the hat away. Absolutely no cost. All you have to do is type something into the chat. We'll be back in 1 minute. Okay, so thank you so much for joining me here, everybody. We have a lot of stocks we're going to talk about today. Obviously, everything we talk about here is for educational purposes. It's up to you to make that final decision. Made it my mission to help you make better decisions. If you could just do me a favor, if you get some value out of these videos, by the time we're done here today, if you could do me a favor, smash that like button and hit the subscribe button. It would mean the world to me. More importantly, it lets me know that I'm actually providing value that you like. So we're going to hop on over. We're going to go straight into the GameStop story. Hey, Allison, how's it going? Ross, good morning. There's my buddy John. How are you, pal? We're going to go right into GameStop, and we're going to pull up the story. For those of us who are a little bit less tech savvy, I guess, NFTs, non-fungible tokens, are the big story for GameStop right now. We've seen the story before where GameStop has a story that just jumps on it. It starts to explode. So not only is it non-fungible tokens, but if we zoom this in a little bit and we take a look here, non-fungible tokens, cryptocurrencies, and another part of the major turnaround plan. Now, I can tell you as an entrepreneur, starting to get away from what you do well is not really always a good sign. I have to be honest with you. You want to do it, you learn what you do well, and then scale that business. But look, NFTs are incredibly popular right now, and obviously crypto. We're also going to talk about crypto today. We mentioned yesterday crypto being in a box, Bitcoin specifically. Bitcoin broke down yesterday, but something good happened, and we have an alert set for Mara, which is the Bitcoin mining stock that we usually play. When I'm buying Bitcoin stocks, it's usually Mara is the top one that I'm usually involved with. So we're going to get into the charts of GME, and we're going to get into the charts of AMC to see if we're going to get some bounce with that. We're also going to talk about Hood today. Again, we mentioned it maybe about a month ago to say we needed to see certain type of price action. If we saw that price action, then we would start to consider looking for a new long. And we're starting to see it. So we're starting to see something under the hood. And this is where we kind of elevate what we're doing. Instead of just looking for stocks to buy, we're taking it a step further. Before we look for those stocks to buy, we're reading the tape, reading the order flow, and then sometimes certain signs pop up that are pretty interesting. So the software that I'm going to use to raffle off the hat today, I've never used it before. It could be a lot of fun or it could be a complete disaster. We'll know. I just want to let a bunch more people get on. And then once we hit 100, we'll actually do that. We'll get 100 people on there. All right. From Singapore. Wow, that's awesome. Hey, Paul, good morning. Thanks so much for joining us from Singapore. That is absolutely amazing. Thank you. William Band, we haven't spoken in a while. I hope that your eyes are doing better. I know you've been recovering. I hope you're feeling better. So let's get into GameStop and let's actually discuss what GameStop trades mean. So obviously, last night we were up $38. If you can see in the corner over here right now, we're actually up $19 and change. So it was actually up double what it's up right now. So it was up another $18. So let's say 169. It was all the way up here and it's pulled back. So it's got to get through this level. So let's just be real. Let's be real about this explosion, okay? This is not necessarily changing the fundamentals of the company. This is just a really exciting story about something that they're looking to get into. So what does that mean for us as active traders? What does that mean for us as somebody who's really looking to make decisions, maybe make some cash flow? we need to have a strategy. And I know that sounds ridiculous. Like, yeah, I know. Can you give me the idea already? What we're going to talk about is the actual strategy and how you manage this. And if you've been watching our channel for any number of times right now, or if you've actually been a member of our bootcamp, you know that the main price, when we read the tape, is the opening price. So whether it's the opening price for the day, the hour, the week, the month, the quarter, the year, it doesn't make a difference. You need that line in the sand to tell you it's moving closer to or further away from that price. And I'm actually going to give you I want to give you a real world example of this using the SPY ETF, and the importance of it. So if we jump over to the SPY and we drop down to the 5-minute chart, and it doesn't matter if you're day trading or not. This is prior to the Fed minutes, and you can see this is the opening price, and price was basically just dancing around it, right? Then you go down to yesterday's price action, and that's the opening price. You can see price was barely getting away from the start of the day. So what does that have to do with GME? What does that have to do with buying or selling GME today? Wherever GME opens today. So let's just say it opens at 149, which let's just say it's right around there, right? So if GME opens at 149 and you're actively day trading the stock, now it could be from today if you're looking to swing trade the stock. It could be day trading from the opening price and or every hour as it unfolds. The higher likelihood of follow through is you need to force it to be above an opening price or a landmark from whatever time frame you're looking to buy it. So let's say you're looking to swing trade GME stock right now. You want to buy it today based on this news because you think the news is pretty good. So what I would be doing is I would be using today's opening price, and as long as it's above today's opening price, that's going to be the level that I use to read the tape. So let's just say, for argument's sake, it looks like it's right around 150 right now. So I'm not going to use Monday. I'm not going to use moving averages. I'm not going to use any of that, stochastics, MACD, RSI. I'm not using any of that because we're trading a news story right now. If you're trading a news story, you have to be in the most current price action. So one of the biggest things to remember as an active trader is news overtakes the charts. So all of the other price action, when big news like this comes out, you're basically just reading the tape. This is pure tape reading, really advanced stuff. So if it opens at 150 and I'm looking to swing trade it, it has to hold 150. As soon as it's this way and stays above 150, then I'm looking for a push and a pause and a spot to add. But what are we looking for? We're looking for it to hold the bid. That's the terminology that we use. So remember, what we're looking to do when we're looking to buy stocks, we want to see, do buyers step up, pay higher prices, and then hold it there? We actually got a good question yesterday in the boot camp. Somebody was talking about a bull flag, and the stock actually went up on one giant candlestick and then went sideways, I don't know, for about 7 or 8 candlesticks. And I was asked if that was a bull flag. Technically, it is a bull flag, but you like to see a little bit better, longer term pull to hold that flag up. So in this case here, because it's the first time it's exploding on this particular news story, the amount of shares I plan to have, and I'm just going to keep using 150 as a reference point. If it gets above 150, I want to see it push up and hold. In other words, I want to see the people that pushed it up in the first place are holding the bid. If there's selling coming in, they're standing there saying, no, I want more because I think this is a good story. If this thing spikes up, comes back to that 150 level, I'm just using 150. We don't know where it's going to open. Comes back to that 150 level, I'm out. I'm not going to second guess it. I'm not going to hope and pray that it stays above that level. If the reason it exploded doesn't hold, and I'm sure you've been through this before because I know I went through this early in my career, where you buy a stock that's going up, and then after it goes up, whether it's the open for the week or even for the day, if you're day trading, you're like, yeah, this thing is an unbelievable buying opportunity. I couldn't wait to buy this stock this morning. It goes up, and then it just starts melting away from you after it opened. And you keep buying because you're like, no, it's a good story. It's a lot of volume, and I love the idea, but it keeps melting. So what I'm trying to give you right now are the reference points to trade something that is going to move fast, that's going to have a lot of volatility, it's going to have a lot of volume, it's going to have a lot of attention, but it needs your attention around a reference point. So if I'm looking to swing trade it, whatever that level is, if I'm looking to day trade it, there's 2 different levels I'm going to be watching in GameStop today. And I just talked about one of them, and I'm just going to use yesterday's, let me find a day. Let me use this one as an example, okay? We're going to actually use these two days here as an example. Let me actually make this a little bit bigger so you can see it. So right here, this is the opening price for this day, which was, looks like actually first trading day of the year there, right? So here's the opening price, and it stayed above the entire day. You can see here's the level. Now, if we go over to this day right here, right there, we were below the opening price the entire day. Now, you're like, oh, wow, that's super fancy, right? But it is. You actually need to use a reference point that helps you determine whether or not the order flow is still there. Now, here's what ends up happening. We have this higher opening. It rockets higher within that first hour. Again, we're talking about day trading here because we already gave you the swing trading strategy. Now you need to go from hour to hour with 2 reference points. The first reference point is, and again, I want to be clear on this because depending on your software, it could act a little bit differently. The hour that I watch is 9:30 to 10:30, 10:30 to 11:30. So that means that the last half hour of the day is just that last half hour, but 9:30 to 3:30 are the hourly candles. That's how I do it. You might do it differently. If your software does not default to starting at the bottom of the hour, then you can do the same thing with 30-minute candles, just to give you a heads up, because we've seen that problem once in a while. But here's the thing. If you're day trading GME and AMC, similar, right? Using that opening price, like you see here, if it's above the opening price, you have proof that today's order flow matches the idea. So if we open higher, hold the opening price, meaning the first print of today. And how do you know that? Is the daily candlestick green or red? That's the first thing, right? But as the day is unfolding, you're going to get a lot of this back and forth. You're going to get a lot of people reading the story, interpreting the story, placing real bets and buying and selling that stock, right? So if we're looking to buy GM stock and now it is 10:35, an hour after the market opens, and we're looking to actively day trade, we see 20 million shares, volatility is all over the place. We want to get in. Now we use the 10:30 hour as our second reference point. So we have the opening price, and then we have the opening of the second hour from 9:30 to 10:30, 10:30 to 11:30. So what I'm telling you is every single hour I adjust to stack the order flow as a day trade. So what that looks like on this chart, let me actually pull a horizontal bar in there so we can get an idea, is this guy right here. So that's the first hour, right? Obviously, that's the opening price. Then, you know what? Let me actually go over here because it was a bullish move, and I'm going to pull this in here. And right there. So right there is the first hour. And as of this moment, we're above, and we're like, okay, cool. As of right now, it's above the opening price and above the current hour. Now we go out to 10:30 and we make another distinction. Okay. So if we go out to the 10:30 candlestick, which is right there. Okay. So from here to here, we're good. But now 10:30 opens up. And from here to here, so we're moving this over right now. From here to here, we're actually still bullish. But then over here, right around 11:30, it changes. So now you have to make a decision when you're trading GME today. As of that moment, we're good. As of right there, we're above the opening price, but now we're below this current hour. Big difference. So now you have to make a decision during this moment. Are you still buying a stock that's strong from the open, strong from the previous close, but going down right now? That is where I lost more money when I first started trading, because I didn't understand, yes, it's bullish. Yes, it's up from yesterday's close, but it's going down right now. This is the skills of the tape reader, that whether you're day trading, swing trading, or even longer term position trading, as long as you have that line in the sand, as long as you have that definitive number that you are leaning on to read the tape. Now, you'd be like, oh my gosh, that's so confusing, right? No, it's not. You're already doing it. When you enter a position, you are reading the tape based on your entry price. Nobody on Wall Street knows better than you. Oh my God, I'm making money. Oh my gosh, I'm not making. It's going. You're reading the tape based on where you bought it. In this case here, we're elevating what you're thinking about as a trader, and you're elevating yourself from chart reader to tape reader, because you're trying to do this before you even put the trade on by having that number. So today's opening price, each subsequent hour, Monday's opening price, January's opening price. This is how you start to have a reference point where you're like, I really want to buy this stock, but my reference point right now, it's going down here. So what we just pointed out, and I want to bring this up in a big way so that it actually really brings this home for you. So that if we go from right there, okay, so from right here is 11:30 to 12:30. So we go into the day saying, yeah, we want to be a buyer of GameStop. Everything looks great. Here's the opening price. Here's the opening for this hour, right? This is the 11:30 candle. Actually, let me move that up just a little bit right there. So this hour from 11:30 to 12:30, it's positive from the open, but negative for this current hour. What I just showed you is where most traders drop the ball. What I just showed you is where most traders don't take it a step further and say, yes, I want to be a buyer of this stock, in this case, buying GME stock, but they don't have a reference point to say, right now it's going down and the thing is melting, and you'll keep buying it when it's not confirming what you need to see. So remember what we talk about all the time. When we talk about a push and a pause, we're talking about reading the tape, talking about that level, that price. It could be your entry. It could be the opening price. It could be the opening price from 10:30 to 11:30. You need a reference point. Top traders have these reference points before they put the trade on, because our job is to stack the order flow, stacking the order flow from the hour to the day to the week to the month, and then in that sector and in the market. You're putting all these pieces together to build your argument. That increases the likelihood of it moving in your favor. It doesn't mean it's definitely moving in your favor. It means it's probably stacked in your favor that it's going to move in that direction. But the window that I just showed you here, and you want to take a snapshot of this, the window that I just showed you right here is it was positive from here to here. This is the opening price for the day. Actually, that's the opening price for the day right there. So it's positive right there from today's open, but negative this hour. So here's the thing I want to get across to you. If you choose to trade when order flow is in conflict, you have to admit that it's not a perfect idea. If you still like the bigger picture in the idea, but you recognize that there's conflict. So in other words, it's below the hourly price, but above the open. It's above the open, but below the week. If you have conflict like that, that immediately has to say to yourself, it's not perfect. How much do I really like this idea? If you have conflict, that means that you need to reduce your initial position size until that conflict is resolved and you get more feedback that it's moving in your favor. That's professional trading. And that's what I promised to teach you, because there's a difference between I see a bull flag versus I understand trade management. When you learn to stay away from these mediocre situations, or I should say less than perfect, think in your mind conflict. When you have to know what perfect looks like. And let's just talk about what perfect looks like. If we're looking at this chart right here, and this is the open, as long as we're above the opening price, that's perfect. And if the new hour starts here, from here to here, it's actually still perfect. But as soon as it goes below this current hour, it's not perfect anymore. As soon as you acknowledge it's perfect, you should have conviction for follow through. And you could probably trade a little bit more share size. At least that's what I do. When we have conflict where 1 and 2 are not on the same page, I'll reduce my initial share size until we get feedback that says now they're in sync and we can expect follow through. So that's the entire game plan that I'm looking for GME today, as well as AMC, because we'll probably get some follow through on AMC today as well. All right. So we're going to actually try a new software today. I think this could be kind of fun. We're going to give away this hat today. So no cost, whoever wins, you have to reach out to our support team. So what I'm going to do is I'm going to start collecting comments. All right. So what we're going to do here is I need you in the chat to type in the word GameStop. For everybody that types it in, we're going to start to see all the entries going in there. We'll get up to a certain amount. Let me actually show you right now. Type in the word GameStop into the chat, and we'll start to see it populating here for the amount of people that typed it in, and then we're going to give away the hat. All right. All right. So we got 5 people so far. We'll let that populate. Everybody keep typing in. I've never used the software before. It looks like it's pretty fun, but we're going to give away a Stock Trading Pro hat. These hats are pretty cool. I wear one every weekend. So we want to see, let's try and get up to at least 50 people, hopefully more than that. And we'll get this hat out to you. If not this weekend, definitely on Monday. So type in the word GameStop. All right. We'll actually let that run in the background while we're talking about some other ideas. So what I want to walk you through right now is some of the ideas that we have coming into today. So Hood, right? We mentioned Hood this morning. I want to bring up the chart of Hood, and I want to pull it up on the daily chart. Now, before I start to get, kind of like negative comments about I'm picking a bottom and blah, 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 I want to give full disclosure on this. I'm talking about potential accumulation in a stock and specifically talking about Hood right now. I'm not saying I'm jumping in with full share size. What I'm talking about right now, as we've been talking about today, is next level tape reading. We're talking about going beyond just reading the charts. All right. So I'm going to show you what I'm looking at in Hood, and I want to show you why Hood is interesting to me right now. Okay. So we're going to pull this up on the charts. Full disclosure. Okay. Let's see how many we got. We got 54. Let's see if we can get a little bit more in there, and then we'll actually give. So type GameStop into the chat. So here's what I'm looking at. Okay. When we zoom out Hood, look at the volume in Hood here. Okay. At all-time high. So if you are a regular subscriber of our channel, and I hope you are, please hit that subscribe button. You'll know that there's 4 different stages of order flow. There's accumulation, a markup, distribution, and a markdown. So accumulation is when a stock is going to the downside, ends up going sideways, and during that sideways pause, you have churning with heavier volume. That's accumulation. That's smart money sitting on the bid saying, I want this stock right now, but they're still selling because it's going down. So they're buying it quietly, but you see the volume expand. So what ends up happening, and I just want to make sure you look at this volume spike right here. Okay. So what ends up happening is, think about it. Let's just say, let's use Marissa as an example. Let's say Marissa wants Hood. She's a hedge fund, and they're selling it, and she's just sitting there buying it. They're selling it. She's sitting there buying it. But Marissa needs 5 million shares. And as of right now, it's going down, but the sellers start to see it stop going down. So now what does Marissa do? Marissa now has to start paying higher prices. So as of right now, and I want you to take a snapshot of this because this is an important one to have for yourself right here. You see the volume picking up. Let me actually look at that over the last 3 days. Something is changing in the price action in GameStop. So what ends up happening is when the buyer, and again, who is the buyer? We don't know. We just know it's somebody that is starting to step up and absorb those shares in Hood. So once they start to absorb those shares and need more, then they have to start seeing and paying higher prices. So what we're doing in Hood right now is it's on our tracking journal, looking to see if and when smart money is done sitting on the bid as selling is happening. Selling dries up, then the smart money has to start paying higher prices. And we should see bigger green candles that are well bid, which is higher highs, higher lows, and increased volume. So what we're doing right now, again, if you're a regular viewer of our channel, we like to script out everything that we do. So we script out, if this happens in Hood, then we're interested. If the volume picks up and it starts to churn, that's the first thing. If the volume picks up, it starts to churn, and the daily candlesticks start to show higher highs and higher lows and close near the highs and have volume, that's the next thing. As these things start to unfold, then we start to consider looking to build an initial position in Hood in this example. So all of those pieces go into it. So please don't send me hate mail. I'm not picking a bottom. What I'm walking you through is how to recognize when smart money stops the selling and there's the potential for a reversal. And then if we see the daily and weekly candlesticks go well bid, then we will start to look to build a position. Okay. So, all right. So let's actually go over to the page. Let's see what's going on here. All right. We got 60 people. So again, I just want to say one last time, type GameStop in there, one word, and we'll give everybody a chance to get in there. I've never used this software before, but I think it's going to be kind of fun. And then we'll get into a whole bunch of other ones. All right. All right. So let's actually, let's give it a shot. Let's see what's going on. All right. Looks like Kevin Senior 29. All right. Awesome. So we'll leave that up there. Let me actually take a snapshot of that. Let me get a snapshot. Kevin, you are the winner. We'll get that hat out to you. Get that off the screen. All right. That was kind of fun, right? We'll do that at least once a week or so. So Kevin, awesome. Kevin, you'll see in the in the description below the video, you'll see our contact. Reach out to our support staff and we'll get your information so that we can send it over to you. All right. So awesome, Kevin. So does everybody understand what I just talked about in Hood? We spiked down, we're going sideways, and volume is increasing. So smart money is stepping up and saying, all right, I'm going to start buying it, which is where we saw that accumulation. So it's going to be interesting to watch to see if they have to step up and start paying higher prices next week. If they do, we will start to do it with them. All right. So I want to walk you through some of the other stuff on our sheet for today. Hood, obviously the one that we just discussed. Let me actually make this a little bigger so you can see it. XLE energy stocks remain the leading sector. A few 20-day breakouts looking for follow through. So if we go over and look at XLE, which is the energy sector ETF, right? You can see here that we're breaking out. So what we're looking for now are some stocks in the energy sector that we can keep an eye on. And a few of the ones that are on our radar today: DVN, COP, FANG, Chevron, and that's what we got right now. You could probably add CPE in there as well. Okay, not as strong, but it's one of the ones that can actually move pretty well as well. So if we work our way down the XLF, the financial sector, if you've actually been watching this with us recently as well, we actually had a big moment here this week where we were talking about the 50-period moving average holding. So we were kind of stuck in a range over here. This day right here was pretty significant. You could see it was resistance, selling. Finally got through there with the bullish gap. Now the XLF is actually at a pretty big inflection point. So that means now that as we're starting to build our game plan for the day and the week, XLF, although a lot of the financial stocks are not necessarily in bullish order flow yet, they are now have our attention because they have the smart money attention. So now we're going to work our way over into a couple of stocks that are banks, as well as some other popular financial stocks that you probably have seen. So as we said here, we're going to be looking at Morgan Stanley, which is not too far from all-time highs. Citigroup showing some really nice bullish price action recently. And this is an interesting part here. Some regional banks, as well as insurance stocks. So if we look at Morgan Stanley and Citigroup, we'll just take a quick look at those guys right now. So here's Citigroup. You can see it's clearly not bullish yet, but we got a push and a pause and a bullish gap, and then another pause, and then another move higher. So it's starting to reverse. You can see it broke this trend and broke that trend. Now, Morgan Stanley, we've been watching for a while. Morgan Stanley is not that far from all-time highs either. So what is the game plan specifically in Morgan Stanley? In Morgan Stanley, I have an alert, not a buy stop, an alert at 106. Right now, it's trading at 103.80 pre-market. So if it rallies up to 106, my alert triggers, and then I evaluate for an entry at that spot at all-time highs. But now, again, stacking the order flow, we're also looking for the XLF and some other stocks along with Morgan Stanley. But I want to point out a couple of regional banks that we just mentioned before. So STT is one. You can see actually right at that same level, very similar. Zion Bank is another one. And you can see that's actually looking pretty good there as well. And the last one that we talked about was PNC. We just talked about GameStop. I want to finish up today talking about Mara and Bitcoin. If you remember yesterday, we drew the box in Bitcoin and we used the most recent contract, which was here. And we mentioned that the bearish move to the downside broke to the downside. And if we go out to the longer term contract and use the continuous month, you'll see here that the 42,000 level is where we were looking for support. So short-term support came in here. You can see it was resistance, held to support. So this 42,000 is a pretty significant number. Now, you can be like, oh, that's so easy to look back at the past. Well, what are we actually looking at when we're looking for support and resistance levels? We got to really think a little bit deeper. We are looking for the place that buyers or sellers did something significant the last time. And we actually had a comment last week of somebody saying indicators and chart patterns don't work. That's because you need to learn how to use them. If we are going to give significance to a price, like in this case, 42,000, it was resistance, support. That price means something because people with real money did something at that price. They either sold to keep it below that level, which they did here and here and here, or they bought it after it pulled back. And remember, this was a 10,000 point day where it just got crushed, and then finally held it at that same level again. So we're here again. So does that mean, oh, now we just start jumping and buying? No, we need a little bit more proof than one day. However, it is significant. Now we know that we could lean on 42,000. So in other words, if we bid in front of 42,000, if we get well bid and we start to maybe go up for a day or two, get a little bit of feedback from the market that we're well bid in Bitcoin, then we would lean on that. So we have confirmation and a little bit of a rally. We have support, which is where buyers stepped in multiple times. And now we have the whole beginning of the trade worked out. The only other part of the trade is what would be the potential first profitable area. In other words, what would be our initial target to justify the risk? And we already kind of have that there. There's two different ways of doing that. We could either use the 50-period simple moving average, or we could dive in there with a Fibonacci retracement level, which is, I'm going to say, is probably most likely at the same level, which is, look at that, right on the button, 50% retracement and the 50-period moving average right at the same spot. So that's how the trade is unfolding. I'm not looking to buy Bitcoin just because support held, but it means something. So Bitcoin pushed down, held 42,000, which we talked about yesterday. So I'm not armchair quarterbacking it. Now we have the first sign of a bottoming tail. If that holds and we go well bid, and I'm going to show you what well bid means in case you happen to be new to our channel. Well bid means this. We want to see higher highs and higher lows here. So this is the start of a move. Let me actually get that off the screen. This is the start of move. But what we want to see next after this candle is this. We want to see well bid and well bid. So that would be the start of a new move. This would be the stop loss, and this would be our initial target. Now, please, what I just said was initial target. I didn't say that was all we were trying to make, but you need an initial target in order to justify your original risk. So if those things happen, as we mentioned yesterday, we're going to work our way over into the favorite Bitcoin mining stock that I like to trade. And we have an alert, and you can see very similar. This price matters. And yesterday we punched through that. 30 is where I have my alert. So I am looking for it to get back above 30. So Mara, a Bitcoin mining stock, let me just pull that back up one more time. I'm looking for that to get back above 30. If it gets back above 30, then I'm looking for the same thing. I'm looking for well bid candlesticks that will give me an entry. It will give me my stop loss. And then if we do the same thing with the Fibonacci retracement, again, just as a ballpark, just to get ideas, then we'd be looking at right around 56 as the next level. And that shouldn't be shocking, right? There's some big price action at 56. There's some big price action at 56. So it shouldn't be shocking. So that's how we're mapping out Bitcoin and scripting out our game plan, looking for the next trade if Bitcoin holds that bid at 42. But here's the thing, and here's the big thing that a lot of traders miss, and this is where you get into trouble. We just mapped out, if this happens, if this happens, if this happens, then I plan to do this. Where you get in trouble as a trader is if you map it out and say, if this, then I'm doing this, and you act anyway if it doesn't happen. So in other words, if we're looking for well bid, but the next couple of candles break down, good traders do nothing. Rookie traders buy no matter what because they have the fear of missing out. That's the secret sauce. If you're struggling, is if you build out, if this happens, then I plan to do this. But you said, if this happens, but it doesn't, but you take action anyway, that's on you, dude. That's an unforced error that has nothing to do with the market. And when you learn to eliminate those unforced errors, that's where your trading starts to elevate. All right. I want to walk over and just show you really quickly the rest of that spreadsheet that we're looking at today. If you want, you can take a snapshot of it. But you can see GME is obviously one. We're also looking at some insurance stocks on breakouts today. Caterpillar is probably, well, that's actually finished up on Caterpillar and the XLI. So if we're looking at industrial stocks, you can see that the industrial ETF is now at a pretty big level. So again, very simple terms. This is a price where the last 1, 2, 3, 4, 5, 6, 7, 8 times it got up to that level and came back down, but it's resting there again. But as we look at the sector rotation, which again, this is something we do every day, the industrials have worked their way from the bottom up to the top 4 right now. So if we're looking at that and the top 4, now we're starting to build the argument that maybe we're going to see follow through at this time. If we're looking to see follow through, and I just want to walk you through what we put over here. Okay, CAC close to an inside day and resting at a major breakout level. If it pops, could be a 2-week swing. So if you take a look at the trade that we mapped out here in Caterpillar, if it gets above this level, we're looking at 222 to 246. So here's how I'm mapping out this trade in Caterpillar for myself. It's been going sideways as the XLI is what we just looked at. So because order flow is just starting, if not mildly neutral to slightly bullish, that means if I buy a breakout in Caterpillar today, I want to force it to close above 222. There's two different ways to do it. You could force it to close above, a little bit more conservative, or buy the breakout above 222. But because order flow is sideways, I just want to point out what that looks like. You can see here, look at the difference between this and this, okay? Mark that down mentally in your head. That's a big difference. This price action here compared to this price action. Bullish order flow well above the 50-period moving average, pushes and pauses. Right now, we're kind of sideways, but at a breakout level in the stock and a breakout level in the sector, and you have room to go. So in this case here, because remember what we said before, if you know what perfect looks like, you can go in with a little bit more share size on your initial entry. In this case, it's a little less than perfect, but we stack the odds a little bit because the ETF, the sector, is also at a breakout level. If the sector breaks out, if the stock breaks out, I'm going to start an initial position. I won't have full share size. If it breaks out and pulls back, I'll get out. I only have half my share size. If it breaks out, pauses, I will add, then looking for 246. So you can see the map of the trade here if you want to take a snapshot of that for yourself. All right. So anyway, we covered a lot of stuff today. I want to congratulate Kevin. Looks like his name is Kevin. Kevin, go down into the description and give us your email. You'll see in support at Stock Trading Pro. Congratulations. That was actually kind of fun. We've never done that before. So I'm assuming your name is Kevin D Senior 29. I'm going to assume that's your name. Either way, send us an email to support. So GameStop, big news today. If you didn't catch the beginning of today's video, we walked you through bar by bar how I'm planning to trade it today. Look for some follow through off of AMC as well. We're also taking a look at Hood to determine if Hood has accumulation and see if that starts to reverse. If all those things unfold, we should have a pretty exciting day today. Also, economic numbers at 8:30 today. All right. Please do me a favor. If you got some value out of this video today, please do me a favor. Smash that like button and make sure you subscribe so you get updates. We have some more training coming out this weekend as well. Have an awesome day, everybody. I want you to know how much I appreciate you joining me here. It really, really means a lot to me. Go make some money today, and I'll see you soon. Thank you so much, everyone.